Hey everyone, and welcome back to Everything About Accounting. We've climbed our way down the income statement, and today we've reached the final and often most talked about figure, net income, also known as net profit or even the bottom line. In simple terms, net income is the profit a company makes after deducting all its expenses, including the cost of goods sold, operating expenses, interest expense, and taxes, from its total revenue. It's the money left over for the owners or shareholders after everything else has been paid. Think back to our lemonade stand. After you subtract the cost of lemons, sugar, and cups, cost of goods sold, and also any other costs like your time, even though you might not formally pay yourself, and maybe even a small amount for taxes if you were a real business, the remaining money would be your net income or net profit. Net income is found at the very bottom of the income statement, hence the nickname, the bottom line. It's a key indicator of a company's overall profitability and financial performance over a specific period. Investors and creditors pay close attention to net income to assess a company's ability to generate profits and reward its owners. Consistent and growing net income is generally a very positive sign. A company can choose to do several things with its net income, such as reinvest it back into the business, which becomes part of retained earnings in equity, or distribute it to shareholders as dividends. So, to summarize, net income, or net profit, is the final profit figure after all expenses have been deducted from revenue. It's the bottom line and a key measure of a company's profitability. There you have it, net income explained in under 90 seconds. Now you've reached the bottom line. Let me know in the comments if this explanation was clear. And don't forget to subscribe for more quick and easy accounting lessons. What important accounting concept should we tackle next? Thanks for watching, and I'll see you in the next video.